And right now, folks, we're going to talk to our man, Tim Ord. You can reach Tim. We talk to him every Tuesday and Thursday at the bottom of the hour, 3:30. You can reach Tim at his website, ord-oracle.com. And let's jump right into it. Tim Ord, good afternoon.
Yeah, good afternoon. How you doing, Tom?
Doing well, man. We got quite a relentless market, Tim. What are you making of it, man?
Well, we got a little divergence, nothing real serious. I'm kind of just looking. This is chart one here, and this second window, or actually window down below the SPY. This window here is the SPY. But anyhow, I do the SPY VIX ratio, and the only reason why I do that ratio is because when the SPs go up, this ratio should go up, because the VIX actually trades the opposite of the SPY. So if you do the SPY VIX ratio, it goes with the trend. It's a little bit easier to follow. But in a nutshell, when the SPY is hitting a high, you should see the VIX, or the SPY VIX, hit a high. And the last time that did not happen was back at the mid-May high. We had a minor high back in mid-May. You can see right here where the SPX VIX ratio made a lower high and the SPY made a higher high. We got something similar going on right now. Over the last 4 or 5 days, you've been making higher highs, and this ratio is making lower highs. Nothing real, terrible. I think at some point we're going to pull back, but it's not a major sell signal. It's just we're probably going to pause the uptrend. But I do think we're going to get back to the 570. We'll go to chart 2. The reason why I may get back to this is a weekly chart of the SPY, and last week we broke above the previous highs of the last 3 weeks. And when you break above a previous high, you should have this is a weekly chart, so it's a weekly volume. You should have at least the highest of the previous highs. You should break those highs on at least equal volume, if not higher. And we broke above the previous highs on 340 million shares. The previous highest high of those, that little trading range of the previous 3 weeks, right here, was 370 million. So you broke above on 340 million. That works out to about 8% lighter volume on a break above the previous highs. And normally when you break above the previous highs around 8% or lighter volume, it's usually a false breakout. But it's just a minor. This is nothing like major. But again, if you break above a previous high in a lighter volume, it implies a false breakout. So if you close above that previous high, which is around, 595, if you close below 595, then that would be a false breakout to the upside. So if you can't hold the highs, the previous highs, it'll attempt to take out the previous lows. Well, the previous lows is 570. So it's not a big decline, but you may go back down to the bottom of the trading range. And that's probably what should happen. If you look from here to here, I'm calling this a left shoulder of a head and shoulders bottom. And so if you do symmetry, a lot of times the left shoulder will equal to the right shoulder. Matter of fact, actually I got another chart to show that. But I think what's going to happen over the next, several days, maybe a couple of weeks, we're building a right shoulder that's probably going to look similar to this pattern that was created going into was the left shoulder, which basically started in November and lasted until it looks like about February back here. So head and shoulders patterns have a lot of symmetry. So if the left shoulder is 3-4 months, the right shoulder should be 3-4 months, and that's the reason why you got a doldrum market going on, because you're probably going to build just a trading range, and this trading range is going to turn out to be a right shoulder of a head and shoulders bottom. But so I got my projections that you may go down and try to rally again, go back down, and maybe we break out in sometime in August, and I'll show you the reason why that August may be a good time frame. But there's not a lot of money to be made other than trading against the previous highs and previous lows, because I don't think the breakout's going to come maybe in September. The reason why I say September is this reason. Here's the head and shoulders. This is the monthly pattern, and I did a cycle line here, this red cycle thing going on. Well, the right shoulder, in my opinion, started around December, and the head started in April, so I measured the left shoulder to the head and took the head and measured it out. It comes in around August. So I think you could screw around in this time frame until August. So that's another month, maybe 2 months. I don't know when in August, but then from there we start breaking out to the upside. But the bigger pattern forming is probably is a head and shoulders bottom, and the right shoulder is forming right now. The head is the April low. As I said last Tuesday, this is a railroad pattern right there. The reason why I call it a railroad pattern, the market goes down on high volume, and it has to reverse back up on about equal high volume, and the two candles should be about the same. So it kind of looks like a railroad track. So you go down on high volume and you come right back up on high volume, and both the left and right price patterns or candles should be about the same. And that's exactly what happened. And those come at major reversals. You can do it on a daily, you can do it on a weekly, you can do it on a monthly or whatever. It works on all time frames.
Nice.
But anyhow, they predict a major low. So I think the April low is not going to be tested. The worst scenario you're going to get is around that 570 area. And I think that 570 is going to come up, I don't know, soon. Am I going to short the market? It depends how clear the signal is. But a lot of times during the summer, you get these dull markets, and they're a little bit hard to trade. I trade off of fear. Fear are the easier trades. They're the harder ones to put on. But they're a lot easier to make money, because when you get fear, you get a really good trade setup. And I think that fear may come in probably August, maybe September at latest, and that's the trade I'm kind of keying on. But between now and then, if we get down to 570, we get a little bit of fear in the ticks and trend, I may consider a long position. But right now I'm neutral.
And, I love the analysis, Tim, as always. And it in my own head here, it kind of makes sense. You get the market goes down 20% into those April lows. We're up 25% from those lows. Maybe you digest that a little bit. Quite a move.
Yeah. Yeah.
Stay with us, Tim. All right, we'll come back, folks. We're coming back with Tim. We're going to talk a little gold as well. Don't go away. Welcome back, folks. S&P's up by about 14 right now. NASDAQ 100 in the green, and we're talking to our man Tim Ward. And, folks, you're hearing Tim talk about the ratios right under the services tab. 6 secret ratios every trader should know about with Tim Ward at TFNN. One of those, the SPY VIX. I love that webinar you did, Tim, and that's available, folks. You sign up for it, you'll gain access to it instantly. Watch it as many times as you like, and it's pretty cool how you take a look at these ratios, Tim. You're comparing it to the VIX. And it makes sense. And I'm talking fundamentals. I like bringing the technicals back sometimes. You're looking at market prices, and then you're looking at fear, right? Like you talk about with the VIX, which is is that why? And maybe we could jump around. I know you got your chart ready, but some of those ratios, it's pretty cool how the VIX. I follow where you're talking to my dad, how that stuff relates when you tie in that fear gauge with some of the indices and some of the other aspects that you look at on charts, right? Is that how that works?
Yeah, you can tell, right, here's a weekly chart, and if you notice the VIX is up, and you can actually see it a little bit better here. My chart's getting kind of messy. But anyhow, obviously the SPYs are, compared to last week, we're a little bit above last week's high. And if you notice, the weekly charts at VIX has even turned up here a little bit. So that's a warning sign. The smart money is, kind of watch what's going on. And if you notice, where the high of this week is pretty close to that resistance level up here around that 610 area. Does it have to get exactly 610? No, but we're in that vicinity. So
it's pretty close.
We're starting to see,
right? Totally.
Yeah, pretty close. And the VIX is up. I don't know what tomorrow's going to bring, but it's a weekly chart. But chances are, if you look at this week's volume, we got 1 day to go. I don't know if this week will be reaching last week's volume or not? Probably not. So that'd be kind of another sign. So you're kind of like hitting higher highs and lighter volume. At some point, the market's going to reverse. So, but it's going to find big support. I won't get into it, but there's big support around 570. I don't think, other than test it maybe a couple of times, that's going to be solid support, and that's what I'm really looking that vicinity to get the next buy signal. So we'll see how that works out. But I'm kind of being patient here. Everybody's kind of bored with me because there's not a lot of action here. But the market's creeped up. I got some bearish signs, but nothing really huge. So let's flip to the gold market. What do you say?
I like it. Let's do it.
All right. This is the top window is a bullish percent index for the gold miners index. And what that measures is the bullish percent index measures the percent of stocks that are on point and figure buy signals. So the gold miners index of the stocks in the gold miners index, I don't know, I think there's like 30 some in there. 96.43 of them are on buy signals according to the point and figure buy signal method. So in other words, almost 100% of the stocks in the gold miners index are on buy signal. Well, you think that would be bullish. This is, I think, a monthly chart. No, it's a daily. Okay, it's a daily chart. Chart goes way back, though, to 2006. Bullish percent index started, it looks like, about 2008. But you get up around 95%, and we're 96.43, but you get up around 95%. I marked all the previous times you did that, going back that many years. It's pretty rare when that happens, but every time it happened, the last 3 times it happened, you got a high. Here's it back in this. You went through a sideways pattern before it declined. Here was a top. Here was another decent top, and here's a decent top here. I don't think we're going to have a decent top, but I do think the upside is minimal here. And I'll go through that and the reason why. So that's a bigger view where we are. So it's kind of late in the game. You get that much bullishness. You get 95% or more of stocks on buy signals. The market's getting too frothy. Here's a shorter term view. The bottom window is the GDX to GLD ratio. Next window up is the GDX advanced decline cumulative with the Bollinger Band on it. Next window up is the GDX up-down volume with the Bollinger Band on it, and that's also cumulative. And the top window is the GDX. So this is the GDX up here. And you put Bollinger Bands on it when you get 3 of the 4 indices getting above the upper Bollinger Band, which actually all 4 did on this last rally up. Normally the market's due for a rest. How big a rest, you don't know, but at least previous ones looked like at least a month. Some went longer. This one, went down for October to January before it reversed back up. So we're short term. We just got too exuberant to the upside. And I actually got a lot of emails over the last several weeks, or last 3 weeks probably, ask me what stocks to get into. And I'm thinking, well, there's a lot of them, but I don't think it's quite right now. I do think there's rotation going on. But the big stocks right now, like AEM, Newmont Mining, and actually GDX itself, is probably not the great buy right here. I think you're going to get a pullback. And here's another reason why. It's another way of looking at it. So I always like to have at least 2 different, if not 3 different indicators saying the same thing. And this is another one. This is the monthly GDX. And I put a Bollinger Band on it. And if you get 80% above the upper Bollinger Band, which, back here you did, back here it's kind of hard to see, back here you did. And we actually did, I got out in April. I had an upside target around 50. Maybe I thought I'd get to 52. It actually went to 53. Because it's just 80% above the upper Bollinger Band. And it did back off before the month was out, and I got out. And now we're going up for a retest of the April high. We're testing it right now. And so I'm thinking we're not going to keep going here because I don't think we'll have the volume this month to push above the April month volume, which is what you need to have the trend continue. But also you got RSI. You get up around 70 on the. This is a monthly time frame, not a daily or weekly, but a monthly. So you got the upper Bollinger Band. You're 80% above the upper Bollinger Band. You got the RSI hitting over 70. Right now we're at almost 74. You're due for a rest. So how big a rest? I think we could get back to 40.
Okay.
So just consolidation or an uptrend. Consolidations are
Sure.
good.
Yeah.
So it's nothing to fear, but it's kind of being patient here. Everybody wants to buy at the top, and everybody wants to sell at the bottom, and that turns out to be true this time around. We got one more chart here I wanted to cover. This is a big trend on the GDX. What I did, I compared the monthly HUI to NDX or QQQ. This is the NASDAQ. And I think there's a big change going on in the market. It's pretty hard. So what I did, I put an RSI on this thing. So on the monthly HUI NDX, when this RSI is above 50, the market's in an uptrend, and they stay in an uptrend for a long time. So this period here from 2000 to 2012, gold stocks outperformed the NASDAQ. From 2012 to 2024, NASDAQ outperformed the gold stocks.
The other way around.
Yeah, so now I'm thinking the gold stocks are going to start outperforming the NASDAQ because this is the first time since 2012 that the RSI got above 50. We're at 56
You look at
area right now.
Some of those tech
58.
companies, Apple pulling back a little bit. They got quite a pricing for those tech stocks right now for sure.
You and your dad made or actually me and your dad made a lot of money in that gold run up from 2000. So
I remember that myself. I was barely 20 years old. Tim, thanks so much, man. Have a great week. We'll talk to you on Tuesday. Folks, we'll be right back.